All right, let's get into it. When you think of Berkshire Hathaway, you're probably thinking Apple, Geico, maybe some Coca-Cola. But under the surface, a quiet, massive transformation has been happening, turning the company into an absolute energy titan. So today, we're going to deconstruct that huge and, let's be honest, often misunderstood strategy. You've definitely seen the headlines, right? Berkshire buying up huge chunks of big oil companies. It gets a ton of press. But the thing is, those public stocks, the ones everyone is talking about, that's just the tip of the iceberg. It's a tiny clue to a much, much bigger story happening behind the scenes. So this is what everyone sees. And look, it's not small potatoes. Based on the latest filings, we're talking over $30 billion sunk into just two companies, Chevron and Occidental Petroleum. I mean, together, that's more than 11% of Berkshire's entire public stock portfolio. That's a huge bet by any standard. But like I said, this is just where the story starts. That $30 billion, get this, that's less than a quarter of Berkshire's total energy play. The real engine, the absolute core of this whole strategy, it operates almost completely out of the public eye. $95 billion. That's the estimated value of Berkshire's private energy holdings. That is more than 3 times the value of their public oil stocks combined. To put that into perspective for you, that's bigger than the entire market cap of a company like Ford or Starbucks, and it all comes from one single entity. And here it is, Berkshire Hathaway Energy, or BHE. It's a wholly owned subsidiary, which means you can't buy its stock on the open market. It's this massive, sprawling conglomerate of regulated utilities, handling everything from power plants to natural gas pipelines. And because it's regulated, that's the key word, its profits are incredibly stable and predictable. It's the total opposite of the volatile oil market. With assets clocking in around $140 billion, this is the hidden giant we've been talking about. So, you might be wondering, why have these two completely different kinds of investments? You've got this basket of volatile oil stocks on one side, and then this super stable private utility on the other. Well, it's actually a brilliant strategy of opposites, designed to balance each other out perfectly. Think of it like this. The public stocks, Chevron and Oxy, that's a direct bet on high oil and gas prices. Yeah, they're cyclical, they're volatile, but they offer enormous upside when commodity prices soar. BHE, on the other hand, is the complete opposite. As a regulated utility, its returns are predictable, they're stable, pretty much no matter what oil prices are doing. It's the perfect hedge, a financial anchor, and it's also a massive capital sink, meaning it can absorb billions and billions in investment for steady, long-term growth. Now, the architect of this next phase is Buffett's designated successor, Greg Abel. And, it's really no surprise that he is doubling down on this energy-focused vision for Berkshire's future, because his entire background is in running BHE. And Abel isn't waiting around. He's already making some big moves. Ever since he took over all non-insurance operations, Berkshire has just been aggressively piling into Occidental Petroleum, now owning nearly 30%. That signals they want deeper control. And at the same time, under his leadership, BHE is plowing tens of billions of dollars into modernizing the power grid and massively expanding its renewable energy portfolio. But look, building an empire on this scale doesn't happen without risk. In fact, Berkshire's energy fortress is surrounded by some of the biggest financial threats the company has ever had to face. Okay, the single biggest threat here is the potential for wildfire liabilities. One of BHE's own units, Pacificorp, is facing potential claims of up to $55 billion. $55 billion. No, that is not a typo. Then you add in geopolitical instability, the ever-present risk of an oil price crash, and regulators who might just decide to block future growth. This is a very high-stakes game. So how do they deal with all this? With incredible discipline. They have a clear playbook, no matter what oil prices do. If prices are high, they just sit back and rake in massive cash profits from Chevron and Oxy. If prices are stable, they just hold their ground. And if prices crash, well, they're ready to unleash their cash to buy the dip, upping their stake at a huge discount. They are prepared for anything. But what about that catastrophic wildfire risk or some other sudden global crisis? For that, they have an ultimate defense. It's an ace up their sleeve that basically no other company on the planet can match. And here it is. At last count, Berkshire Hathaway was sitting on over $180 billion. An almost unimaginable pile of money, just sitting in cash and short-term treasuries, ready to be used at a moment's notice. This cash isn't just sitting there collecting dust. It is a strategic weapon. It creates a financial fortress that lets Berkshire absorb pretty much any shock you can think of, from multi-billion-dollar lawsuits to a full-blown market crash. It is the ultimate safety net. So let's put this all together. This slide right here is the key. When you combine Berkshire's cash fortress with all of its energy assets, you're looking at the very foundation of the modern company. Just think about that for a second. Nearly half of Berkshire Hathaway's total value is now anchored by just these two pillars, cash and energy. So look, the big takeaway here is that this was never just about buying a few oil stocks. This is a deliberate, long-term restructuring of the entire company for the post-Buffett era. They're creating a foundation of real, tangible, cash-gushing assets and a massive defense fund to protect it all. So what does this all mean? Is this energy fortress a brilliant defensive move to prepare the company for decades of whatever the world throws at it? Or is it a massive, all-in bet on a fossil-fueled past, just as the rest of the world is trying to move on? That really is the billion-dollar question that's going to define Berkshire's next chapter.